Also, if you were to look at other markets aside from the Philippines, it is showing you that people are trying to position already for a recovery standpoint. But in the short term, again, I'm going to have to caution you one more time, because normally after a rally, you're in that stage of a market that we're still in a attempted recovery phase. And given that, any sharp movements in an up advance will probably get hit by profit taking first.
Hello everyone, I'm Charles Ang from COL Financial, and we are here today to talk about the technical outlook of the Philippine market. Of course, we're with none other than our Chief Technical Analyst, Juanis Barredo. Hi Juanis.
Hello, Charles.
Alright, so last January, you were describing a potential bottoming out process for the Philippine market. And of course, I do remember you cautioning a potential corrective action first in light of the overbought condition at that time. And indeed, the correction did come with the PSEi dropping by 9% since the end of January.
Yeah.
So what are your thoughts on the markets today?
Well, yes, we did anticipate that the correction would come, and apparently it continues to be able to stay present, and that's something that we're still dealing with as of the particular moment. And there were quite a bit of headwinds that came in that went to be able to challenge the PSEi, and that's the reason why we saw quite a big drop, which is a little bit wider than what I anticipated. In terms of what happened, it was really because of the high levels of inflation that the Philippines had to deal with, and these levels started only tapering off very recently. And unlike other markets, which showed a very much earlier pullback in inflation, and that caused some worries into the situation. Also, interest rates remained relatively high and has not pulled back yet in terms of the Fed rate in the U.S. and as well as the overnight borrowing rate into the Philippines. And this continued to be a challenge to the PSEi, because as you give clearly safer investments a higher yield, it automatically competes with our market, and this is a problem that we had to be able to deal with as well. Also, we had this SVB mess that took place into the U.S. I'm glad to see, though, that it didn't come out and fool itself out in much tighter regard. But I think there still is a threat, though it be slight, and it might cause tighter credit conditions to be able to put pressure into the Philippines.
All right. So speaking of the crisis or the banking scare that we saw in the U.S. market, so looking at the charts of the S&P or even the financial sectors there, what are you seeing? Are you seeing the recent rally? I think it rallied recently. Is that a positive sign, or do you think there's still more downside potential there?
I would take it as a positive sign, first and foremost. But that automatically means that doesn't mean that everything is going to be very rosy from this point on. I think people have to understand that we've rallied quite a bit since that low point that we saw earlier in March. But now we have to deal with resistance into the S&P, and that might also cause some agitation, another round of correction that might come in the interim again, which might play itself out maybe towards May. And with regard to the banking sector that you were talking about, I think the worst is over. But I don't think the volatility is over. And so that means that we may have seen the low. We did see a little bit of a rally into the banking sector, and I hope that creates more stability into the global banking system. But I don't think it's over in the sense we'll probably see a bit more choppiness here, but I don't think it would play out too heavy game into the rest of the global scene anymore.
All right. So far we've been talking about like the headwinds that has been causing this corrective action. Looking at it from the other side, are there indicators or charts that are turning positive?
Yes. So I guess this is the reason why I opted to be able to call this a bottoming out process, because we did see some of these good signs quite early already, and they continue to be there. And so if we were to look at some, although the Philippines is taking its sweet time on showing inflation trying to be able to come down, if you look to inflation in the US, inflation in countries like Thailand, many other different Asian countries, even in parts of Europe, maybe except Britain, but we've seen that inflation has been coming down for quite a number of months now, right? And to me, that is a hopeful stand because it shows you that in a global perspective, we are normalizing from very high levels of inflation, and that is very important. And that, I think, will add to the contributive fact that we're going to be into a recovery soon. Also, we're also looking at bond yields, and the reason why we look at this for everybody's benefit really is because this kind of tells you what looks ahead in terms of interest rates. Bond yields tend to move ahead of that. So we've noticed that in bond yields, we're coming off the highs. Despite inflation still staying high for the Philippines, you can see the chart on the bottom there will show you that we've had rates come down quite a bit in yields, both in the US and the Philippines. And I think that it's telling you already that although you still have some negative influences there, the perspective from sentiment is that it is already improving. And that should contribute to the bottoming out factor that we looked at earlier. Also, if you were to look at other markets aside from the Philippines, you would notice like countries like Germany, their market has rallied substantially because of that. If you look at Japan, the market also has rallied back to previous highs. If you look at countries like even China, which recently had done quite well, it is showing you that people are trying to position already for a recovery standpoint. But in the short term, again, I'm going to have to caution you one more time because normally after a rally, you're in that stage of a market that we're still in a attempted recovery phase. And given that any sharp movements in an up advance will probably get hit by profit taking first. So you're probably going to have pullbacks into the market, which we're going to have to factor into the Philippines as well. But I think overall we have seen good technical signs that the recovery is in place. We in the Philippines are just playing a catch-up game.
All right. Okay, now going to the FX market, because historically the PSEi performs well when the peso is appreciating. But recently I noticed that the peso kind of shot up, right? So what are your thoughts on the FX?
Okay, so when we talk about, let's say, the dollar first, if you don't mind, because I thought that the dollar is the basis of what our movements were taking place, and we were synchronized in that earlier on. So if you were to look what's happening to the dollar actually started to subside as the prospects for interest rates to stop climbing in the US was there. That's why bond yields managed to come down, and because yields have come down, the dollar managed to be able to subside from its rally that we saw in March. So I would take that as a good condition, as that would remove much of the aggressiveness we would see in some of the weaknesses in some Asian currencies. However, like you pointed out, going now into the peso itself, the dollar versus the peso is showing an unusual sign of weakness. I didn't anticipate this, although I thought it could rally here over a period of time, but it did it very much right away. And if you were to look at this compared to other currencies in our region, we're one of the weakest. So I can't seem to put my finger on what's causing that into the short term. But I hope it is a short-term problem because we need the peso to be able to stabilize where it is now. If we do see anything more than 56.40 in terms of weakness, we might be able to see the peso back at 57, 57.30 as a potential threat. And I think as you continue to see weakness into the peso, that might draw itself off in the performance of our market. And if I may just to be able to point that out quite squarely, this graph I'm showing you right now shows you how weak we have been. And you can see the Philippines was down between 8 and 9%, while other countries weren't as weak. Maybe Thailand will probably be the nearest, but they were down about 5% into their equity index. There were many other countries have shown much better resilience, if not advances during this time. So I think that's a headwind that has to be fixed. If we don't see or address the situation in the peso, it might force more delay into the Philippines' ability to rebound.
Yeah. Going back to the Philippines, as you mentioned, the relative weakness versus the other regional countries. What are your thoughts on the correction? I know that we warned about this.
Yes.
You warned about this 3 months ago, right? But does the magnitude concern you? Is it bigger than expected, the decline?
Yes.
And how does it change your outlook going forward?
Okay, so in answer to your question, yes. I put up a slide here which I use into my first quarter outlook, and I was using a particular model to base on how I was going to make a recovery or stage a recovery from here. And if you look at my model, firstly on top, this was the Philippine index back in 2019, and I was kind of figuring we're going to follow some path like this, right? And this is what's happened so far into the Philippine index. So it's actually fell further than what I anticipated. Prices have actually fallen even below moving averages, which I was hoping it wouldn't do, and continues to stay below. And these are technical faults that we're going to have to deal with, because when we see these particular types of weakness, the tendency for recoveries from here may take a little longer in time. So yes, I anticipated correction, but maybe not as of this much and this magnitude. And because of the magnitude, the tendency for this is to try to protract itself out in time, or may even carry some degree of weakness. And if I may try to be able to point that out. So the image you're seeing right now is my expectation with 6,400 to about 6,330. This is the area I would have been comfortable with to see that the index pull back to and hold. And then if it can rally from here, it would have been a perfect picture for us, driving a new buy prompt from here and allowing us to be able to recover back maybe to closer to 6,900, 7,100. However, given the conditions I'm seeing on the weakness, there's been an increased chance now that we could actually break support. Last time I didn't bother to consider it, but I have to do it so now. And I think we could probably see a 40% chance that the index break this 64633 level. And if it does, it might pull back between a range of about 6250, 6200, or maybe even 5958. I'm hoping the last one will not do it, but I still feel that we are not going to break the lows we saw last October. And we need to see that higher low establish itself as a good base for the market in order for us to be able to buy into, and that means we will probably see a much more worthier rally coming and stemming from that.
All right. So if I get this correctly, it means that at least so far, the bottoming out process, that story is still intact.
Yes.
Right? But although there are some risk, and let's hope it doesn't reach the 6.2 or the 5.9 or even lower than that,
right.
But as long as it holds, then it's still in play. It's just prolonged.
That's correct.
All right. Great. So having said that, what's your advice to our clients?
Okay, so given the bout of weakness we're encountering, and it is greater weakness than what we anticipated, we're going to see different trend conditions from the market now. You're still going to see some strong ones, like for example, the likes of BDO still relatively strong. Then you're going to see something extremely weak, Monde, for example, very, very weak charts. And you're going to see those that are kind of in between. So my advice is to be able to understand what trend segment are you looking at if you're going to trade a particular stock. And you're going to have to know this, especially if you're a trader, because you cannot trade entire thing with one strategy anymore. You're in a varied state, some of it in between, and so you have to vary your tactic. I'll carry you through each one of those. So for those issues that are relatively strong and doing well so far, some of them have pulled up quite a bit, so I would like you to be able to wait for pullbacks into support. Do not chase prices. It doesn't matter where you're from, okay? We are not in an environment where the market's going to run away from us. So here you want to wait for prices to come back to an area that you're comfortable with, preferably closer to your trend line, so your moving averages, and then wait for it to rebound from there and then pick up your stock. You have all the time to be able to do that, so don't be too aggressive from it. Start from strong issues because that shows you that they have resilience. Second, you're going to have issues that are trading between their moving averages. Normally when you see that, that means they're gauging themselves sideways. So if you're in a sideways shift, you want to just buy low into the ranges that you identify in support and then sell it when it comes towards resistance, assuming you have good enough spread in the price. And then you just buy low, sell high, and you continue to do that until a trend change takes place. If you break out of resistance, don't buy it immediately, wait for it to pull back. Like I said, you don't chase prices. Please don't forget that. And then you wait for prices to come back, rebound from support, and that will be the entry spot. So the issues that I have portrayed here, the first ones are index issues. The ones on the right are other popular issues that have decent volume levels that are traded that they can choose from as well. And then you're going to have the weak stocks. And you will see in my list, there's much more here than there were in the other two. And that only tells you how weak the market is given the conditions that many stocks are trading below their moving averages. In these conditions, you're going to have to wait for an opportunity to buy them only when the stock becomes oversold. So that means you see a radical decline come into place, but these are good names. You know these will eventually rally anyway. Pick them up when you see that oversold reading. Or if you see that they seem to be drawing out patterns and breaking out of that patterns or their downtrend lines, and these are opportunities for you to be able to pick them up. But again, these are your last picks, right? I mean, these should not be your first picks because it might take longer for these guys to be able to make a recovery.
Yeah, and these lists are based on today's price, right? As of today, right? And it could change. It's primarily based on the EMAs. Is that correct?
That's
the exponential moving average.
Yeah, it's the easier way for you to be able to gauge whether your stock is either in that strong state or middle side or maybe extremely weak. Just look at where the price is compared to your EMAs or your exponential moving averages. If they're above all the key ones, then that means it's a weak stock. That way it's easier for you guys to gauge which is which.
All right, okay, very clear. Any final thoughts, sir, on the market?
Well, I guess just to sum up the positioning that we have, then let's talk about a takeaway from here. So given the conditions we have, since we're going to see a prolonged condition to be able to base out, that means tone down your aggressiveness. Wait for the market to be able to seek the level of support that we are looking at. There are three areas. As I said, 6.4 and 3.3 are the next level. If we can somehow hold from here, that would have been fantastic. But just in case, as I said, there's a 40% chance this area could break, then we would have to anticipate a pullback maybe closer to 6,250, 6,200. In extreme weakness, maybe even 5,900 to 5,800. Please don't get scared when the market goes there or if it goes there, because that's the opportunity we've been waiting for. And in the process of basing out, these bouts of weakness might provide your last stage of opportunity to pick up shares at these good prices. Remember, we are in a potential recovery situation after a very weak so many years, and this is an opportunity we've been looking up for Prospective 2024. So be patient, right? But be very selective. You cannot use one trading system for all stocks today. There's a bit of varying trend conditions, and that would mean that your tactics have to change in accordance with the trend positions as well.
All right, thank you very much, Sir Juanis, as always.
My pleasure, and thank you for everyone as well.
All right, there you have it, guys. Please stay patient and be selective in choosing your stocks. If you want more insights from Juanis, you could visit our website and look for our technical research reports, such as the Tech Guide and the Quick Tech Guide and the Tech Spotlight. All right, thank you guys for watching.